Hello everybody, welcome back to the channel. I have an amazing video for you guys today. Here is an article from CNBC you guys are going to absolutely love. I will have a link to this article down in the description below. Now check this out. Wild swings in mortgage rates last week caused a rare surge in refinancing. It's very interesting because as you guys know, the feds raised the rates, but then the banks lowered the mortgage rates. So anyone who couldn't get in that refinancing, like earlier this year for whatever reason, they got time to jump back in and get those lower mortgage rates. Now check this out. The average contract interest rate for 30-year fixed mortgage with conforming loan balance of $647,000 or less increased to 5.7 from 5.43. Refinancing applications rose 4% for that week, but were 82% lower than the same week a year ago. Well, obviously, because a year ago they were like 3%, they were like incredibly low. The purchase market continues to experience a slowdown despite a strong job market. This is the biggest thing that is happening, and this is what a lot of pundits are saying, that we're not in a recession because we have a strong job market, but yet we're seeing signs of a slowdown. Why would we see that? What's the difference? And at the end of the day, what we're seeing is how inflation really strangles the economy, because now everything is becoming more expensive. So yes, we have employment, because having high inflation doesn't necessarily mean that we're going to have low employment, right? What high inflation basically means is that everything becomes more expensive, right? And now, as you can see in many different markets, we have been having to pay employees more. As you guys remember, that we had the Great Resignation, and for companies and employers to bring people back into work, they had to literally pay them more. So what does that do to the bottom line? Well, it makes products more expensive, and it's all great for now until we see cracks in the economy, where if we start seeing massive layoffs and we don't get inflation under control, we could have a really bad situation in our hands, right? And that could happen, guys. It could happen. We need to do the best right now to get inflation down, because at the end of the day, like, prices are too high and salaries cannot compensate for those increase in prices. Now, right now, it's all like, oh, big deal. It's only 8%, whatever. No, it is a big deal, because what can happen is if we go into a Christmas season where a lot of people, make most of their money, right? A lot of products are sold during that Christmas crunch, is that if we see less people with money in their bank accounts and we see less products being bought, then you can see a terrible situation during 2023 when all these people start reporting massive losses that happen over the Christmas season. Especially, we have two consecutive quarters of negative GDP growth. If we have a third one and then a fourth one, and then we go into 2023, you're gonna see that the markets are gonna be super spooked, right? So that's when we are definitely going to start to see the crack in the housing market, because people are going to start to panic. Companies are going to start to panic. Companies are right now saying, hey, let's just keep producing. But at one point, the accountant is going to come in and say, hey, we're losing money, right? We're paying too much. Products are, raw materials are costing too much. The employees are costing too much. Rent is costing too much. All those things come they factor in. Energy is getting expensive. Like we did see a break in the gas prices, but hey, guess what? Gas prices are still expensive. Okay, they're not that cheap still right now. So we might say, hey, this is great, but what is gas going to get down to the 350 range? That I would like to see that, but right now they're still high. Yeah, they're not as high as it was, but regardless, it's still going to keep everything high. At the grocery store, remember when milk goes up, from $1 to $1.75 or $1.50, whatever, or $2, whatever it is, when it goes up, that means that people are going to have less money to spend on some other stuff. And we need people to spend money on other stuff, because that's basically what keeps the economy running. A lot of people in this country, we own small businesses. And, what is a small business is basically you're asking people to spend money on something that they don't necessarily need to survive. Like, for the most part, right? Like they have other options. Like if you want to open up a clothing store, that's awesome, but when you're competing against Walmart, not everybody wants to shop at Walmart, but if people don't have money, they're probably gonna go to Walmart and get a cheaper price than go to that, small retailer, right? Because the small retailer, since they're doing less volume, it's going to cost them more to produce the same amount of goods. So basically, moral of the story is during high inflation times, you're gonna see the bigger companies are gonna fare a lot better than the smaller companies, right? And especially with interest rates going as high as they are right now, borrowing money is becoming more expensive. So you could see how that could also hurt the little guy. And basically, what does this all mean for the housing market is we don't really know. Okay, there's a lot of articles of people saying the housing market is not going to crash, but that's kind of disingenuous because in some ways I'm starting to agree because of inflation being so high, it keeps all the prices high. But it doesn't mean that it's a good thing. It's actually a bad thing because we could have even more GDP, less GDP growth, and it could really throw us into a recession, but a recession where prices remain high. That's the issue right there. Because if we can't get inflation under control, prices are not gonna come down, anytime soon. They're gonna slow, it's gonna be very, very slow. And the slower it takes for those prices to come down, the harder it's gonna be on the economy. So we're gonna have to see how this pans out. Now, I'm happy that inflation didn't rise. So now it looks slightly like it could be stabilizing. But 8% inflation or 9%, it's still super, super high. And just keep an eye on that GDP report, because if consumer spending is also going down, that is gonna keep basically the prices high on everything. This is a very turbulent time when it comes to the economy. And that's why a lot of people are spooked, because a lot of people just don't know. There's a lot of people are trying to spin, positive news out there. But at the end of the day, just be careful. If you're in the market to sell a house, definitely talk to a financial advisor, because you might want to get a second opinion to see if this is the best time to list. If you're buying the house, my opinion is wait, kind of. Wait to see what inflation does. But if you do find that perfect house and you can make the payment and you have the down payment, obviously, it's always better to jump in, because again, if you can make the payment, it's not a big deal. If you buy now and in a year the house drops, 20%, yeah, it sucks, and because you're gonna be paying more than your neighbor. But at the same time, if you really love the house, then I guess it doesn't really matter. If you can still make the payment, it really doesn't matter at that point. So just something to think about. But definitely, we need to keep an eye on this, guys. We need to keep an eye on it, because when is gonna be the best time? I'm personally, for me, I'm still looking to pull the trigger in about 2 years from now, a year, because I'm gonna wait this out, because I want to see where it goes. Because I'm trying to basically buy more properties, and I just want to be, I'm kind of like a budget. I want to buy on a budget. I want to buy like an investment property, a second and third investment property. So that's kind of what I'm looking at. And I'm gonna see, I'm not trying to buy something big. I kind of want to buy something smaller. So it could be easy to rent out, definitely by a good school district to hopefully rent it to a nice family or something like that. But yeah, so I'm gonna wait personally. I'm definitely going to wait. I'm gonna wait and to see what happens. I think prices are gonna come down over the winter now, because there's gonna be even less buyers. And as we can see, is that we are having more supply out in the market right now. So a lot of things going on, a lot of moving targets. We need to keep an eye on the ball, and we need to stay educated. With that said, I just want to say thank you to everybody who's been watching my videos and supporting my channel. I totally appreciate it. Thank you so much. You guys have been leaving comments. You guys have been liking my videos, and it really, really does mean a lot to me. Now, I just want to say, if this is your first time watching my videos and you like what I have to say, don't forget to smash that subscribe button and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.